Introduction to Investing Terms for the SIE exam. Welcome to your SIE exam prep. In this lesson, we'll cover some important terms related to investing, trading, and financial services. We'll keep it simple, with clear definitions and examples, so you can understand the key concepts. 1. Going long versus going short. Going long means buying a security with the expectation that its price will go up. Example, you buy 10 shares of Apple at $150 each. If the price goes up to $170, you can sell and make a profit. Going short means selling a security you don't own, hoping its price will go down so you can buy it back at a lower price. Example, you borrow 10 shares of Tesla and sell them at $200 each. Later, the price drops to $180. You buy them back, return them to the lender, and keep the $20 per share difference as profit. 2. What is an issuer? An issuer is any company, government, or organization that creates and sells securities to raise money. Example, the U.S. government issues treasury bonds to raise money. Companies like Microsoft issue stocks to fund their business. 3. What is a security? A security is an investment that can be bought, sold, or traded. It represents ownership stocks or debt bonds in a company or government. Example, stocks, bonds, mutual funds, and options are all securities. 4. Debt versus equity securities. A debt security is a loan investors give to a company or government. The investor gets paid back with interest. Example, a bond is a debt security. If you buy a bond from Amazon, you're lending them money, and they promise to pay you back with interest. An equity security represents ownership in a company. The investor shares in the company's profits and losses. Example, buying a share of Apple stock makes you a part owner of Apple. 5. Broker-dealer. A broker-dealer, BD, is a firm that buys and sells securities for customers and sometimes for itself. It acts as a broker, middleman, or a dealer, selling from its own inventory. Example, Charles Schwab and Fidelity are broker-dealers. An agent is an individual who works for a broker-dealer and is licensed to buy and sell securities for customers. Example, a financial advisor at Morgan Stanley who helps clients buy and sell stocks is an agent. 6. Broker versus dealer. A firm acts as a broker when it matches buyers and sellers and earns a commission. A firm acts as a dealer when it buys and sells securities from its own inventory, making money from a markup or markdown. Example, if you buy stock from a broker, they connect you as seller and charge commission. If you buy stock from a dealer, they sell you shares from their own inventory at a marked up price. 7. Commissions, markups, and markdowns. Commission, a fee a broker charges for arranging a trade. Markup, the extra amount a dealer adds when selling a security from its inventory. Markdown, the amount a dealer reduces when buying security from a customer. Example, if a dealer buys stock at $50 and sells it to you for $52, the $2 difference is the markup. 8. Agency versus principal trades and when to disclose. In an agency trade, the broker acts as a middleman and charges a commission. In a principal trade, the dealer sells securities from its own inventory and earns a markup or markdown. Disclosure. They must disclose how they acted, principal or agent, before completing the trade. 9. Investment banking department. The investment banking department of a firm helps companies raise money by issuing stocks and bonds. Example, if Nike wants to sell stock to the public, an investment bank like Goldman Sachs helps them do it. 10. What is a market maker? A market maker is a firm that buys and sells securities all day to provide liquidity in the market. Example, if you want to buy Amazon stock, a market maker ensures someone is there to sell it to you. 11. Buying at the ask, selling at the bid. The bid price is what buyers are willing to pay for a stock. The ask price is what sellers want to sell for. Example, you want to buy Tesla stock. The bid price is $199.50, meaning buyers are willing to pay $199.50. The ask price is $200, meaning sellers want to sell for $200. If you buy, you pay the ask price, $200. If you sell, you get the bid price, $199.50. 12. investment advisor, and the ABC test. An investment advisor provides advice on securities as a business and receives compensation. This is tested using the ABC test. Advice about securities. B. Business of giving advice. C. Compensation for the advice. Registration. Small advisors register with the state. Large advisors, over $110 million in AUM, register with the SEC. 13. Municipal advisor. A municipal advisor helps local governments with financial decisions, such as issuing bonds for schools or roads. Example: if a city wants to build a new highway and needs to issue bonds, a municipal advisor helps them decide how to do it. Conclusion: these terms are the building blocks of the SIE exam. Understanding them will help you grasp how the financial markets work. Keep practicing, and you'll be ready to ace your exam.